of the March 2022 APC. Just as a bit of an intro, because I don't think, well, you never know, but I will make the assumption that you guys know me. So as I've already said, my name is Mato Donkem Petra. I've been with Edunamo for a while now. And I look after tax, so be it at CTA level or at ITC level. I do tax, and then I'm interacting with you guys as well now for EPC purposes. Okay, right. Yeah, I don't think we're going to be too long today, but let's see how things go. We will, we'll be tackling task F, and of course, if there are any questions that you want to ask, please feel free to just jump in and ask. So sometimes I do lose track of what is happening. So if you want to say something, just unmute yourself, get my attention, and I will allow you to then to share your views. Trying to think, what else have I forgotten? I don't think there's anything else that I've forgotten. Of course, the best way to get this class going is via interaction. I think it's your role that you play as part of this class, not necessarily just to come here and listen to myself, but it is to ensure that you are giving me better insight into the way you think, so that I'm also able to direct you in certain directions where it's necessary, and provide input to you guys. All right, any questions before we start off? Okay, I guess I'll take. Okay, go ahead. Uto. All right, I'll take you to God cold feet then, instead of talking. All right, so we're gonna look at task F, and I guess where I'm gonna start today is to start off with the info from the day. Okay, my assumption is you would have looked at the video that I put together for task F, and you would have looked at the pre-release information and gone and thought about what are some of the things that you need to think about when it comes to tax. I must say, though, the one thing I say it's nice, although people tend to say no, it's not nice. But I think the one thing that's nice about tax is it does provide a certain level of certainty when it comes to EPC or APC, in that we still need to rely on what is contained in the legislation or what is contained in case law and additional documents like guidances issued by SARS. So there is a basis on which you can rely on, and in terms of writing, you do not deviate that much away from the for example, from the legislation, which ultimately is what gives us guidance in terms of the tax treatment that we adopt for transactions. Okay, right, then let's have a look at the info on the day. So I'm going to share my screen. Okay, cool. So here's the info on the day. Okay, so we're looking at document F. Then in document F, we are then saying, so we've received an email from the Chief Financial Officer to the Senior Financial Assistant. Okay, so the CFO is Susan Sibanda. She sent us an email on the 30th of March 2022. The subject is the tax matters. So it then says hi. So what I'll do is, as we are reading through this, I will highlight to you guys the things that I think are important. What is it that we need to do? What are some of the things that we need to think about as part of putting together a response to this task? Okay, so she writes the email and says the following. So she says, hi, I hope you read my email dated Friday, 25 March 2022 at 11:08 a.m. So that would have been the email that contained the pre-release information. Okay, so if on my side, I am hoping that you guys have read that email that was released to you beforehand. I finally managed to work through the handover file and documents that Suresh prepared and got some additional information relating to the relief that Suresh was investigating. It seems like he was referring to a certain higher percentage that we could qualify for related to the allowances for credit losses on trade receivables. Now, remember from the previous information, we're given information that there's an allowance for credit losses that was raised, and from the tax front, they were looking at what are the tax implications from a tax perspective, and if there are any, what can I call this? If there are any additional benefits that we can get from a tax perspective that will then enable us to qualify for a higher deduction. Right. So then in his notes, he stated that he applied for a directive from SARS and that we have received feedback from SARS that our application has been declined due to inadequate steps taken to enforce repayment and inadequate supporting documentation submitted. Right. So these two things are quite important. So if I just highlight them. So these two statements are quite important because SARS has come back to us and said, we are rejecting your directive and here are the reasons for that. Okay. Why do you think that is something that is important in this instance when dealing with SARS? So the fact that they've written back to us and they've said to us, here are the reasons for declining what you're requesting in the directive.
Isn't it in terms of the SARS prescripts to say that they have to give you reasons and all, they have to write back to the taxpayer as well, if they've denied it?
Okay, what prescripts? I get, and you're correct.
Yeah, no, in terms like because if you can lodge an appeal if you also unhappy. There's a SARS ombudsman and things like that, and you can take it to them if there's anything you can question it. You can lodge an appeal if you're not happy with the outcome. In terms of that, I think it's in terms of their prescripts or something like that, but I can't really recall it.
Okay. No, thanks for that. Somebody else wants to assist him. No, you're definitely on the right path. Okay. Remember from the pre-release information, they said you would need to give us advice or you need to assist us with regards to technical and tax administration matters. Okay. So of course, then this falls under the tax administration matters that you need to consider. Okay, so I'll let you guys think about it. So I'll try and think about the question that I asked. Okay, that why is this important? And I do agree with the point that was made that yes, there is something in place that talks about this thing. So my question then is, what is that thing that is in place that talks to dispute resolution and so forth?
I think with the SARS Tax Administration Act, I think we have something called the burden of proof. So I think if we feel otherwise about the finding that SARS has noted here, we have to go back to them and tell them that we have to actually show it to them that necessary steps were taken to recover what is due to us. And also, because they are also complaining about inadequate documentation, we have to go back to them and find out exactly what is the incorrect documents that they've received. And then we have to provide to them the adequate documents in order for them to allow our thing. So from what I'm picking up, the reason for declining it, it's like we deliberately didn't actually collect from our debtors in order for us to benefit from the allowance that they give us, something like that. So I think you had to talk about that and also explain why you believe that SARS has a point here and what we can do going forward. Thanks.
Okay. No, I like that. So one, yes, they've given you what they term to be reasons from their side. But if you look at that, what does it mean that inadequate steps taken to, you didn't take enough steps to enforce repayment, and I guess maybe you'd need to ask SARS further, what do you mean? Similarly to inadequate supporting documentation submitted, what do they mean? Is there a prescribed format that they require documents to be in order for them to accept those documents as adequate proof for what you are trying to do? Okay, so that's just something that's quite important when it comes to the Tax Administration Act, and we'll come back to that once we've read through the entire task. Okay, so he also stated that he also stated that we must challenge the decision. Okay, so for me, I stop there. Now there is something here. They're saying you are likely to go and challenge a decision. So if you are likely to go and challenge a decision, already then I'm thinking of the dispute resolution process with SARS. Okay, so there we are potentially looking at dispute resolution. Okay, and then getting an understanding of how does the dispute resolution process work at SARS, because of course then you might have to look at this and say, okay, fine, we challenge a decision, and one, can we actually challenge the decision? I think that's the first thing that you probably need to think about, that can you actually first challenge a decision? And if the answer to that would be yes, then the next one would be how do you then go about challenging that decision? Okay, but we're still reading through. We don't know what the actual task is at this point in time, and we're just making notes for ourselves. And then for the past 8 years, Suresh has been handling the tax matters for us, and Lampros takes its compliance and obligations seriously, as we want to be seen as a reasonable corporate citizen. Therefore, I would really need your help with this. Right. Then she then says, first, please give me an explanation about the nature of the tax relief in terms of Section 11J that Suresh was referring to. And second, without having to resubmit the application, can we challenge the SARS decision to decline our application? And if so, how do you go about doing this? I would hate for us to miss any deadlines. Right. So the point I just made over here, talking about challenging the SARS decision, as you can see from the CFO, she has requested that we must actually look at challenging the decision. So I think for me, there are 3 activities that you need to do, or 3 things that you need to do. One would be that you'd have to give an explanation about the nature of the tax relief in terms of Section 11J. And then the second one, so this would be the second one over here. So the second one would then be, without having to resubmit the application, can we challenge the SARS decision to decline our application? And if so, how do we go about this? So as you can see, the second requirement has got an additional requirement depending on the decision that you make and the direction that you've taken. Okay, and I think the other thing that's quite important is the point that is made here at the end, where the CFO says, I would hate for us to miss any deadlines. So for me, if the CFO is worried about the fact that we might miss some deadlines, then I then say, okay, fine. What I potentially need to do when it comes to here, I need to first talk about any possible deadlines that we face, and maybe when it comes to the objections or against decisions, if that's the case, what would be the deadlines in relation to objections? Okay, so those are 2 things that I'm thinking of. So it's really about compliance, meaning returns and so forth. And then the next one would then be the objection deadline. Okay. Now, so from your perspective, then we've got these 2 tasks. So where would you then start in the first task? So what is it that you would then tackle, and what is it that you would then discuss as part of that task? Anybody?
Hi, Madotanke.
Hello.
From the IOD says, first, please give explanation about the nature of the relief. So I think that would be my starting point, to first discuss the nature of the tax relief, which is to determine if this, what is it called? The debt was in terms of the IFRS 9 and then all those applications that, all those, things that applies to the IFRS 9 debt. That is written off, yes.
Okay, no, that's correct. Based on the pre-release information and what we now have, what is it that then you would then capture on your paper? Yes, you've given me the direction in which you would go, but now I need more specific details around which direction. What would you then state as part of your response in the email?
I will state that the debt was in terms of IFRS 9.
Okay.
Yes. So I want to open my my work that I've done. Text. Yes, I will state that, okay, fine. The debt applies to IFRS 9, so the allowance is going to be 40% of the debt that has been impaired in terms of IFRS 9. So I'm going to go to the financials and check the debt that has been impaired in terms of the impairment. Then I'll use the 40% on it, and then I think I'll discuss it. Yes. And then
yes,
I'll
discuss it.
Yes, and then I'll continue to add the 25% of the allowances for the debt impaired related to that debt, ne? And then now,
sorry, you're losing me there. That last part about 25%.
Okay, because they say that there will be a 25% allowance for the debt impaired related to the debt, other than the debt qualifying for the 40% allowance.
Okay.
Yes.
Now, okay. So what debt would then qualify for the 40% allowance?
The debt that will qualify, the one that, I think, that's why I got confused there. I will lie to you.
Yes. So what debt would qualify for the 40%? And this is a question to everybody, seeing that she's saying she got confused.
So it will be the debt that's actually sitting on 120 days and above. I think that's what will be eligible for, because we're using IFRS.
But here it says that the one that does not apply to IFRS 9, we can use 120. So on the one that applies to IFRS 9, that do also apply those days.
So IFRS 9, according to my understanding, anything below 120 days, we apply 25%, and then everything above 120 or 120 and above, we apply 40%.
Nope.
Yeah, I on the standard it says that if it does not relate to the IFRS 9, that's when now we use the 120 days. But if it applies, it doesn't have days on that condition. So that's, I don't know. Yeah, that's what I read it on the standard. Yes.
Yeah, and that's correct. So remember what section 11J says. So if you look at 11J, it says that an allowance in respect of any debt due to the taxpayer, if that debt would have been allowed as a deduction under any part of the provision of this part, had that debt become bad, of an amount equal to, it then says if IFRS 9 is applied to that debt. So if IFRS 9 is applied to that debt by that person for financial reporting purposes, other than in respect of lease receivables as defined in IFRS 9, that have not been included in income, the sum of 40% of the aggregate of. Okay, the key thing is that for you, where you've applied IFRS 9 and you'd like to get the 40% allowance on what you've raised, what's key there is that that 40% is of the loss allowance relating to impairment that is measured at an amount equal to the lifetime expected credit loss. Okay, so that's the key thing. So we're not talking number of days we've applied IFRS 9. We are talking about the lifetime ECL method.
I remember now. Thanks for that.
All right. So then, so it will be 40% of the ECL method. And then where you've not used the ECL method under IFRS 9, then the rest will then qualify for a 25% of the loss allowance relating to the impairment.
So what you're saying is that the difference, like let's say we've got a bad debt of 100,000 and we've got ECL of 20,000. So the remaining 80,000 will be 25 and then the 10,000 will be 40%. That's what you're saying.
Okay, say that again. You said we would bad debt of 100,000.
Yes. So we'll take, and then ECL is 20,000.
And the ECL is 20,000. Okay.
So you're saying that the 40% will be on the 20,000 ECL lifetime.
Yeah.
And then the remaining, which is meaning we're gonna say 100 minus 20, then we're left with 80,000.
So when you're saying bad debt, what do you mean? Is that amount actually written off or a provision?
Yes, the return off, yes, the debt return off, yes.
Okay, all right. So an amount that is actually written off, remember there is section 11I. Because remember section 11I says if you have actually written off an amount, then you can claim a deduction in terms of section 11I. Whereas section 11J, you are looking at amounts where a provision has been raised, but you have not actually written the amount off. So in your example, that bad debt of 100,000 rands would be written off in terms of section 11I. Whereas the ECL of 20,000 rands, you then deal with under section 11J.
Okay, yeah. Can you actually, can you please elaborate on the 25%, how it works? Like, where does it come from? The difference, what is it? Yes.
So remember in the 40%, we said if you've applied IFRS 9 and you've applied the lifetime ECL method, then you'll qualify for the 40%. And then it then says, if you've applied IFRS 9 and you have not applied the lifetime ECL method, then you can only get 25% of the ECL provision that has been raised. So it's effectively saying, okay, fine, I'm first going to claim 40%, and whatever does not qualify for 40% will automatically then qualify for the 25%.
So the one that does not qualify, is it the one for 12 months ECL? Is that what you're saying? Because I think I'm getting lost there.
What's that for 12 months?
Yeah, when you said which one doesn't qualify, I think
so
I'm getting
yes. So anything that is not lifetime expected credit loss method qualifies for 25%.
Yeah, that's what I was saying. The one I get this the lifetime and there's a 12 months one.
Yes.
So you're saying that the one at 12 months is going to have 25%.
That's correct.
Okay, no, thank you so much.
Okay, cool. All right. So we did apply IFRS 9 in this instance. So they would then claim either 40% on where you've used lifetime ECL method, and you would claim 25% on everything else. Okay. Now, something that's quite important, and I guess this would have to be part of the explanation as part of your email. Think about, let's take a step back. When you raise an amount as accounts receivable, is that amount inclusive of VAT or exclusive of VAT? When you're putting an amount into accounts receivable, what does that? So remember, accounts receivable represents an amount that you're going to receive from a customer, and that amount that you're going to receive from the customer includes VAT. Okay.
Yeah, correct.
Right now, when you're raising the provision for accounting purposes now under IFRS 9, would you include the VAT or would you exclude the VAT?
Yes, I think it's included.
Yeah. Yes.
Because
so the VAT will be included. Happiness, yes, because remember the ECL is raised based on what a debtor owes us. So we don't strip out the VAT and then calculate an ECL. We literally say the debtor owes us 100,000. Let's raise an ECL on that 100,000 rands. meaning that when you are raising that ECL for accounting purposes, you are raising an amount that is inclusive of VAT, right? When you are trying to determine Section 11J, what are you busy with? You are now busy with tax, right? And remember, in terms of the Income Tax Act, you cannot have an amount being claimed, for example, as a deduction that is inclusive of VAT, where you are dealing with somebody that is a registered VAT vendor. Okay, so that's just something that else that you need to talk about, that yes, we are going to get a Section 11J deduction, okay, and it will be 40% on where we've used lifetime ECL method, it will be 25% on everything else. However, what we also need to take into consideration is that those amounts are inclusive of VAT, and for income tax purposes, we must strip out the VAT before multiplying by 40% or by 25%. Okay, so that's just something that a lot of people tend to miss, because then they're not thinking about the fact that, oh, there might be VAT implications, or yeah, there might be VAT implications included in this transaction that I then need to account for.
Hi, Matwenke.
Yes,
there was something I was reading about VAT implication on irrecoverable debt, and they spoke about VAT adjustment. What is that VAT adjustment for?
Okay, so think about when you sell goods to somebody and you sell them on credit, what happens from a VAT perspective?
When you're selling it on credit?
Yeah, so you sell goods to somebody on credit. So you go and you'll debit accounts receivable, and it will be an accounts receivable amount, and then you go credit your revenue,
yes,
of let's say 100, and then you also go credit VAT of 15.
Yes.
Okay, which means on that sale you've accounted for VAT. At a later stage, when you then see that, okay, fine, this amount is not recoverable. What the legislation then says under Section 22 of the VAT Act is that you are then allowed to claim an input tax deduction, because now you've not actually received that revenue on which you had paid VAT. So that is why then you are then allowed to claim an input tax deduction.
Oh, okay. So were we supposed to think about the VAT implication of the debt, recoverable debt here, or it was just going to be income tax on this trigger?
So for me, it would be income tax. However, even if I look at Section 11J, I would still consider the VAT implications.
Okay, no, thank you.
Yes, specifically relating to Section 11J. So I wouldn't expand in terms of irrecoverable debt and all of that, because that now touches on Section 11I. So that part would have dealt with under Section 11I, not Section 11J.
Okay, no, thank you.
All righty. Okay, then you would have noted that one thing that the CFO then said was that, remember, Suresh had been working on a document. So Suresh had been working on a document, and on that document, one of the things that Suresh had indicated is that we could get some additional information relating to the relief that Suresh was investigating. Right? It seems like he was referring to a certain higher percentage that we could qualify for related to the allowance for credit losses on trade receivables. So the next point I would want to talk about, now that I've discussed Section 11J, okay, what the implications of Section 11J are, where I've applied IFRS 9. The other thing that the CFO would like to know is that, hey, we've done this investigation, and upon us doing this investigation, I saw, or Suresh has hinted that we can qualify for a higher percentage. Okay, so what would that higher percentage be, and how would we then go about getting that higher percentage?
It's 40 to 85%, but we need to have the proof of why we need to get the higher allowance, because they say it's warranted based on the facts of each case.
So what would be the higher allowance?
85.
Okay.
The maximum is 85, minimum is 40.
Yeah, so the maximum is 85. So you can get an allowance above the 40%. However, that allowance will be limited to an amount of 85% of your ECL that you've raised. Okay. But the one thing that is quite important, guys, is that if you look at the legislation, it says that, so I'm reading the proviso at the end of Section 11J, where it reads as follows. It says, provided that an allowance under this paragraph must be included in the income of the taxpayer in the following year of assessment. All right, that, yeah, okay, I'll explain that later. Then it then goes on further to say, provided further that the commissioner may, on application by a taxpayer, issue a directive that the percentage contemplated in subparagraph Roman numeral 1AA or Roman numeral 2AA may be increased to a percentage not exceeding 85% after taking into account. So as you can see, one, you need, in order for you to get the additional allowance, you first need to send an application to SARS so that they can issue with a directive. Okay, so you'd send to SARS and say, can I please have a directive? And I would like to get a higher percentage above the 40%, right? Then SARS will then respond back and say, okay, fine, we'll give you a percentage higher than 40%. Right? But remember, and the reason why I'm only mentioning 40% is because when you read the legislation, it's referring to subparagraph 1AA. And subparagraph 1AA is where we've applied IFRS 9 and we are claiming at a percentage of 40%. And or 2AA refers to where we've not used IFRS 9, but we are still claiming at 40%. So in order for you to qualify for the additional allowance, you need to be at, you must only apply for it on the allowances on which you have qualified for 40%. So everything else that qualifies for 25%, you're going to ignore, and you're going to look at everything that is qualified for 40%. And then from that, you are then going to say, okay, fine, these ones qualify for 40%. SARS, can we actually get an additional allowance on these amounts? Okay. So that is the percentage that we then apply for. Now, something that we highlighted earlier on were the reasons that SARS provided to us for declining our request at the directive that was previously sent by Suresh. Now, if you look at the wording that is included here, this wording looks very familiar. Okay, can somebody tell me where this wording comes from? So inadequate steps taken to enforce repayment. And the next one that says inadequate supporting documentation submitted. That those phrases were taken from somewhere. So where would those phrases have been taken from?
Okay, I'll give you the short. I think that last line in the first paragraph, the inadequate supporting documentation submitted. I think it probably relates to it on the IOD, if I'm correct.
I would also like to try.
Okay, go for it.
So I'm thinking, I haven't really revised the section 11J, but I think why those words are coming out is because I think for you to qualify for a higher percentage, you have to demonstrate to SARS that you've done everything you can to collect that, but you still failed. And then you have to supply with them to them supporting documents that actually proves to them that you did everything you could. Hence, you deserve a higher percentage.
Okay, I agree with that.
Hi.
Hi.
The steps taken to enforce it, section 11J, part 2, capital B, that says that steps taken to enforce repayment of debt. For the supporting documents, I can't find it where it is.
Okay, it's actually under section 11J. So if you look at section 11J towards the end, you've got 6 points that are made there around if you'd like to qualify for a higher percentage, what are some of the things that you need to do? So one, you need to show the history of a debt owed to that taxpayer, including the number of repayments not met and the duration of the debt. So you've got this listing there that SARS effectively wants you to look at. And if you then look at B, B says steps taken to enforce repayment of the debt. So can you see that when you're applying for the directive, already you need to take into consideration and provide supporting documentation about the fact that I have taken the following steps to enforce repayment of the debt. So you already need to give that information to SARS as part of the directive that you're applying for, right? And then C then says the likelihood of the debt being recovered. So you need to give that information again. What are the chances that you're going to recover that money? Okay. If you're thinking that I won't recover that money, then why aren't you writing it off in terms of Section 11J? So not 11J, in terms of Section 11I, instead of you raising a provision on it. And these things make sense because you must remember that sometimes, and this is a practice that has been subject to abuse in previous years, where people raise provisions from an accounting perspective, okay, and knowing very well that those provisions they'll release them back into their books when they need to improve their numbers, you know. And yeah, and I think similarly from a tax perspective, remember you'd add back your allowance in the you claim an allowance in the year that the ECL is raised, and therefore you would end up with a higher deduction in 1 year, whereas you know very well that going forward, those people are likely not to pay you, or yeah. So those are some of the things that they are thinking about here when they're raising this. And then D then says any security available in respect of that debt. So you need to provide that with SARS. And then E then says the criteria applied by the taxpayer in classifying the debt as bad. Then the last one, which is F, it says such other considerations as the commissioner may deem relevant. Okay, so the commissioner may ask you for additional information. So where you've got additional information not necessarily listed under A to E, you can then provide that additional information to the commissioner to try and substantiate why you'd like to get a percentage that is higher than 40%. Okay, and if you look at these reasons that have been provided over here, you can see they're taken straight from the legislation. So all that SARS has said is that, oh, by the way, there are inadequate steps were taken to enforce repayment. So that means maybe we have not provided adequate supporting information to SARS to show that we've taken adequate steps to enforce the repayment. And similarly, our supporting documentation is not up to scratch, which is the second point. Okay, so those are the things that you then need to discuss as part of your email when providing the guidance to the CFO. Okay, any questions? So let's pause there and think, and maybe if there are any questions that are coming up.
Madadong.
Yes, sir.
I just want to ask on that additional 85%, does that only apply does it apply for both scenarios where whether use IFRS 9 or not, or it's only for a situation where you use IFRS 9?
So it applies to both scenarios, whether you've used IFRS 9 or you've not used IFRS 9. But what is key is that it applies in scenarios where you have applied a rate of 40%.
I see.
So yeah, so you might, so in an instance where you've used IFRS 9, you then look and say, do I qualify for that 40%? And then if you qualify for that 40%, you are then allowed to then say, okay, fine. Instead of giving me 40%, can you give me a percentage that is higher than 40%? Similarly, where you've not applied IFRS 9 and you still qualify for the 40%, meaning that you've got debt that is 120 days or more in arrears, then you then say to SARS, okay, fine, I have got debt that I've raised an ECL on that are 120 days and older. Therefore, I would like you, instead of giving me 40%, I would like you to give me a higher percentage than 40%. Okay, it's only those two instances that you can then apply for that additional allowance. Does that answer your question?
Yes, I got it. And then another one is the ECL. I don't know. I saw somewhere where there was amendments for whereby ECL applied to lease receivables. I don't know. You can just maybe correct me there.
Yeah. So if you look, it says that if you look at the way IFRS 9 has been applied, it then says other than in respect of a lease receivable as defined in IFRS 9. So then where you've raised an ECL on a lease receivable, you can't then claim Section 11J. Okay, does it make sense?
Yeah, so my confusion is I knew that it doesn't apply to lease receivables, right?
Yeah.
Then I don't know, somewhere during my research, I found that there were amendments where it applies to lease receivables, but only, I think it says only when it accrues to you, not the future. I don't remember exactly the way.
Yeah. Actually, okay, what the legislation I've got in front of me is 2021, 2022. Look, there was talks of that amendment actually. Let's see. I've got an older legislation here, so let's look at this one. There was not definitely. I take the point that you're making. There were in the amendments that were being proposed for that change to be put through. That's why they're still referring to not having these receivables. But yeah, but in terms of the latest legislation, the lease receivables are still there. But I agree with you. There were draft amendments where that was included, where these receivables were not being excluded in Section 11J.
Okay, thank you.
Thank you. All right. Any other questions before we then move on to the second point now? Right. So the second point then said that without having to resubmit the application, so the application meaning the directive, can we challenge the SARS decision to decline our application? Okay, so do you guys think we can challenge this SARS decision?
Yes, I will always challenge SARS.
On what basis?
Even if there's no reason, I may find something. Based on they said here, inadequate steps taken to enforce repayment and inadequate supporting documentation submitted. But now I must be careful because what the CFO says, without resubmitting the application, so I must check in me submitting additional information based on the requirements. Will it probably impact that thing? But based on those things, because they provided the reasons now.
Yeah.
So if I believe I've got adequate steps was taken in all my things and all those things, I will, and I'll definitely challenge SARS in whichever ways. I always do that.
On what basis, though, are you challenging them? Because you can challenge them and they're going to turn around.
The basis.
In actual fact,
no,
you don't have
the base.
Your basis for challenging us is is non-existent.
No, but the basis based on the prescripts, the thing, whatever I've submitted, based on the section 11, whatever. Oh. No, but this is for the additional. No, then no, I'm wrong because that was for the additional things, for the higher things. So I take my words back.
No, what you're talking about now is the decision. Remember, a decision has now come back from SARS that says, okay, fine, you've applied for your directive to get a higher percentage than 40%. And they've said, no, we're not willing to accept what you've sent through. So now the question is, can you actually challenge that decision?
I think the onus is on the taxpayer to provide all the supporting documents. So I think what we can do is to, I don't remember the word, is to submit again, however, submit everything that is
your
required.
Question, the CFO said without having to resubmit the application.
Then we cannot win it because SARS says the supporting documents that we submitted is insufficient. So if we don't resubmit, then.
But the CFO doesn't want to resubmit, so you need to come up with an alternative plan. So what's that alternative plan?
Okay, Matota, I think for me it will base because SARS has also opened that lack of the ombudsman and things like that. Basically, as you said, the dispute resolution approach to see if I can't follow that route. If there's any dispute that I can lodge based on that, if I feel I am aggrieved, because it will be based on the steps that I can take after I've received this bag. Is it within that thing? And that's probably the way I would go if it's in that dispute resolution and things like that. That's the approach that I will follow. And yeah, That's probably how I would go if we need to, because at dispute resolution, once I've researched it and say based on that, I can go and see what grounds am I not happy with if I believe I was wrongly denied this additional or this higher input. If I followed all the steps, I'll follow this dispute resolution approach.
Okay. All right. So just one thing to correct there, then I'll then tackle the entire thing that you said. So remember, you're saying there's, for example, the text ombud that can intervene. Now remember, the powers that the text ombud has got, the powers that the text ombud has got have got to do with administrative matters. It does not, so the text ombud does not have jurisdiction over the interpretation of the legislation. Okay, so this matter where we are trying to argue against SARS to give us a percentage that is higher than 40% cannot land up on the desk of the tax ombudsman. Okay, because it's not an administrative matter with SARS, but this is around the technical interpretation of the legislation. Okay, and one thing that we just need to be aware of, sorry, I can't see who's talking, so hence I don't refer to you by your name because I'm presenting. The one thing we just need to be careful of is that text is a science of precision. And I'll tell you why. And because it's law is very straight cut. You need to get to that point. You need to be able to substantiate what you're talking about. And when you walk into your exam, writing that it's according to the SARS prescripts will not cut it. And you need to, in substantiating, as I've said earlier, in substantiating what you are doing, you need to utilize the legislation and say, in terms of this part of the legislation, I am allowed or I am not allowed to lodge or to challenge SARS on the decision that they've made. Okay. Sorry, there was somebody else that wanted to say something.
Yeah, can I say something?
Go for it, sir.
Yeah, so my understanding is when there is if you disagree with how SARS treat a certain transaction, whether income tax, VAT, or you have to lodge a notice of objection. So
okay.
when you do that, you have to be very specific and give the details why you're disputing whatever you have a problem with, and also give the grounds. And I mean, if you have to quote the sections where whatever is relevant, why you arguing that SARS treat, because remember, I think it's that tax administration that says the burden of proof is with the taxpayer. So you have to give solid evidence supporting all your why you think SARS didn't treat whatever you're disputing correctly. So after the notice of objection, either you can win or you SARS will still decline it. And then if you still think that you were correct, or your treatment or whatever you did is correct, I think there is a notice of appeal also. And then it's gonna take you to the tax courts and also I don't know the much data after the tax courts. So my understanding was that we can actually dispute this without refiling through a notice of objection. But in our case, we needed to make sure that we comply with those stuff that we read now, to say we attempted to collect the what do you call? I mean, we must have evidence that we took steps to enforce the repayment of the debt, and also like those 6 steps. I don't remember all of them, but I think those were the basis where we can put it on our notice of objection to justify that we actually qualify for that additional allowance. Sorry.
Okay. So question, and not just to you, but to everybody. Which decisions from SARS can be challenged? Can we challenge each and every decision that SARS makes? And
You need
unfortunately,
that if you got proof.
for this answer, you need the legislation.
Isn't that what they said at the owners? What called the owners lies? The burden lies on the Then you can challenge if you got proof that this is incorrect.
Nope.
Like don't
Nope.
know.
So in section 104, I think of the Tax Administration Act, they do give the instances where a decision or an assessment can be, like they give like a list of those. Because I remember from my CTA years that there was that part, but now I can see, but I don't think it's fine for me to read through everything, but it is there on section 104 of the Administration Act to say these are the decisions or these are the things that you can actually object. So
Okay.
yeah.
So you're on the right path, and maybe let me help you. If you look at section 104, subsection 2C, it says that any other decision that may be objected to or appealed against under a tax act. So you see, it does not tell you what can be applied, what can be contested, okay, in terms of objections and appeals. It simply just says what can be appealed against under a tax act. Right, now here we are dealing with the Income Tax Act. So in the Income Tax Act, is there something that tells us we can appeal certain decisions? And the answer to that would be yes, there is something that tells us we can appeal certain decisions. So if you were to look at section 3, subsection 4 of the Income Tax Act. So section 3, subsection 4 of the Income Tax Act, right, which then says any decision of the commissioner under the following provisions of this act is subject to objection and appeal in accordance with Chapter 9 of the Tax Administration Act, which is what we had just read on the other side. Namely, A says the definitions of benefit fund, pension preservation, provident fund, provident preservation fund, retirement annuity fund, and spouse in section 1. So you can contest those definitions. Paragraph B then says section 859, blah, 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 blah. And then it then says section 11E, section 11F, section 11G, section 11G cap A, and section 11J. So what are we busy with? We are busy with section 11J. So that means in terms of section 3, subsection 4, the decision made by SARS can be challenged because it is listed under section 3, subsection 4. And now that you are comfortable that this act is allowing you to challenge that decision in section 11J, that is then when you then go to section 104, which then says if another piece of legislation allows you to challenge a decision, then the Tax Administration Act also says go ahead, because the other legislation has given you a go ahead.
Hi, Matota. Sorry
Yes.
to interject, but on the new texting legislature, things like that, 104 to 106 has been removed.
Section
I
104
just
of
need
the
to.
Tax Administration Act.
Not Administration Act. Okay, I'll check the Administration Act, but yeah.
No, what?
But
So
104, 104, 106.
No, section 104 that I'm talking about is 104 of the Tax Administration Act.
Okay, I'll check that. Thank you.
Okay, remember your objections and all of those things are contained within the Tax Administration Act.
Sure.
Right. Okay, so at this point, the answer to that is then yes. Without resubmitting, we can challenge the SARS decision because section 3, subsection 4 of the Income Tax Act specifically lists section 11J decision as one of the decisions that can be challenged. All right. Now, the next question then says, okay, fine, we have now proven that we can challenge the decision by SARS. Now, how do we go about doing that? So now how do we go about challenging that decision? What is the process?
Sorry, which section has got the list of the issues that you can dispute again? Sorry.
Section 3, subsection 4 of the Income Tax Act.
Okay, thank
Yeah,
you.
section 3, subsection 4 of the Income Tax Act.
Sorry, can I just check on something? I'm
Yes, sir.
sorry to be out of line. I just got confused there. I'm not sure if it's yesterday or today, but when I was looking at the timetable, so that day that on which we're supposed to do text, there was somewhere where I saw 1 hour 30 minutes, and then when I'm looking at the timetable now, it goes from 5 to 9. I just wanted to confirm if we're doing one exercise and we're gonna end off at 9.
Are you already tired of me?
Not at all, bro. No. No, I want,
No, I'm kidding. I'm kidding.
sure, I wanted to confirm because there's something else coming up, but I don't wanna, I just wanna, yeah, because I can't leave the class. That's not negotiable.
Yeah. No.
So,
We won't. Look, we've got task F to finish off today, and that's it.
yeah. Oh, okay. So we're not gonna get to 9.
No, I don't think we'll get to 9, but it
Okay.
depends.
No problem. No, that's fine. That's perfectly fine. Thanks.
Okay.
Sure.
All right. So we've said the legislation in terms of section 3 subsection 4 allows us to challenge the decision, and of course that is supported as well by section 104 of the Tax Administration Act. Okay, now we've identified that and we are happy with that. Then the question then says, and if so, how do we go about doing this? So how do we go about challenging this decision? So how do we go about challenging this decision? What do we need to do? So what steps do we need to take?
Matodonke, just a quick question for me before we go to the process. I'm struggling a bit to understand how we got to section 3, subsection 4 of the Income Tax Act, mainly starting from the pre-release part, because when I looked at it from my side, when I looked at the tax administration matters, I only looked at the part mostly that speaks to missing deadline and incurring additional costs. Maybe if we can take a step back from a trigger identification perspective, how did this challenging part come up from a pre-release before we get to information on the day?
So from the pre-release, there was no info around challenging of decisions. I agree with you. From the pre-release information, it was really looking at the Tax Administration Act and looking at deadlines. So what do you need to do in order for you not to miss your deadlines, in order for you not to incur penalties? Okay, that's that is what was in the pre-release information. Whereas on the information on the day, they've gone on further now. Because remember, in the pre-release, the CFO spoke about the fact that Suresh had sent her a report and she had not finalized, but she will share the report with us. And here now she's sharing the contents of the report that Suresh had given to her. And in that, she then reveals the fact that we had applied actually for a directive from SARS, and that directive was then declined. So from that perspective, I would then say that is your trigger that then sends you to the fact that you now need to challenge the SARS decision, because for info on the day, it says that you've submitted and applied for a directive, and that directive was then rejected.
But then just from the information on the day, so I'm looking at it from a perspective of someone who needs to go back and refresh their tax knowledge. Ne? I'm not sure if anyone else picked it up, but before looking at the information on the day, would we have been able to sort of get enough information from our research to consider the steps in terms of the whole process of challenging the directive and all that? So what
I would say, the fact that you had already started looking at the Tax Administration Act from a perspective of not missing deadlines and so forth, I would always advise that you need to become comfortable with the Tax Administration Act when it comes to, for example, a dispute resolution process. Because over here, we already, from the pre-release information, you could see that, okay, maybe they're starting to talk about penalties and interest, that we are trying to avoid. Could we possibly then object to such information or object to such decisions being made by SARS, where maybe they're saying they'll impose penalties or interest on us? So then I would say from that perspective, you can then look at the dispute resolution process as part of your research to ensure that when you get the information on the day, at least you've got an idea of what the dispute resolution process is all about.
Thanks.
Okay, thanks.
Ma-
Yeah,
Mata-
I'm just a bit worried because I think for me it would have required me to sort of read the whole Tax Administration Act. But yeah, thanks.
So,
Can I ask
uh,
a question?
Yeah, okay, ladies first then.
Okay, so my question was, in terms of the information that they had given us, would I be correct in saying that since they have already rejected they're saying that the application that we made for additional relief, they've declined it, and then they gave us the grounds as to why they have declined our application for additional relief. Would I be correct in saying that the link between what happened in my pre-release when they told me that I should look into the process of applying for additional relief and it being declined to say what information did they need to have as kind of like supporting document for the calculation in order for them to get additional, and also to say what steps would they have needed to take. So in responding to the CFO, I should have came to say, when he asked the question, to say, I would hate for us to miss a deadline. How can we go about challenging this? To direct him to say that in terms of section 104, we can, or in terms of the Tax Administration Act, we can go and dispute this ruling of them declining our application on grounds that in terms of them saying that we have taken inadequate steps to enforce the repayment, to kind of like have supporting documents to say this is what it did. We send the letters, we send the lawyers, and all of those steps. Is that the right way of thinking of it, to say my head should have been on what is it that I've prepared on my pre-release in terms of the step processes of applying for additional relief, and now to say how do we support the grounds that we actually need to be qualifying for that?
Yes.
Okay.
So, Matodonke, I want to
Yes.
ask something. So when you look at the pre-release, I think the second line from the top, it says, in the interim, I would really appreciate it if you could assist me with some urgent tax technical and tax administration matters. Was that really suggesting that we kind of have to look at the Tax Administration Act as well? Because I mean, the only way you can deal with the administration of taxes is if you get the guidance from the Tax Administration Act, where we kind of expected to have had a browse of the Tax Administration Act just to prepare ourselves for whatever could come on the day.
That is correct. You needed to have, so those two things, and then that's why I mentioned it earlier on when I started the class, that if you remember from the previous information, it says tax technical matters and tax administration matters. So it's quite important that you needed, as part of your research, you needed to look at the Tax Administration Act and see what part of the Tax Administration Act would potentially be applicable. And to be fair, when you read the pre-release information, I think it sort of pushed you towards how do you go up, what would you need to do, or what would happen if, for example, there were late payments that were made, or what is it that you need to do to ensure that you don't miss any deadlines, so that you don't have any penalties that are levied.
Thank you.
Okay. Right. Okay, so we've agreed that we can challenge, and the question then is, how do we go about this? So I'll show you guys something. This is the SARS. This is the SARS dispute resolution guidance document. Okay, it's 147 pages, so that's good bedtime reading. Okay. The nice thing about it is it's got tables to also demonstrate some of the things that they've written down. So for quick references and for understanding, it's always easier to just jump to the table. So now if you go here, you see it says assessment slash, so this should be saying assessment slash decision. So whatever decision that has been made by SARS, the first thing that you need to do, of course, you need to go and ask them for reasons. Okay, now, if you look at what they've said to us, all they've said to us is that inadequate steps taken to enforce repayment and inadequate supporting documentation submitted. Okay, so on my end, the first thing I would have done, I would actually not have objected, but what I would have done is to ask them for reasons. Because then when you're objecting, you want to object on the basis of something that you know and that you clear, you're able to disprove what they're saying to you. So if they're saying to you, you've provided inadequate steps to enforce repayment, okay, what do they mean by that? Because chances are you've taken the necessary steps of calling the customer, of emailing the customer, short of maybe you've even sent lawyers to go and try and collect that money. Okay, so what steps then? So what is it that they are not comfortable with that you've given to them? So you'd ask for additional reasons on that, and you'd ask for additional reasons in terms of why are they saying you have inadequate supporting documentation that you've submitted. Okay, so at first go, they ask for reasons, and once you've asked for reasons, right, then you then think, okay, fine, am I able to formulate an objective? So once you've received the reasons, and you can look and say, okay, fine, the reasons are adequate, then what you then do, you then say, okay, fine, actually, SARS is talking nonsense. I want to object against the objectives, against the reasons that they've provided to me. So then your next step then would be taxpayer, then objects. So you go to the objection, right? However, if their reasons are not making sense, then and you can't formulate an objection, then your next step then would be an application to the tax court or high courts. Okay, and where reasons are sufficient for this application, okay, or where reasons are not sufficient, okay, you will ask us then, okay, please supplement, and if they do supplement or the reasons are sufficient, ultimately then go back to the objection stage. Okay, so that would be the process that you then undertake to object against the decision made by SARS. And I think that's something that's important, is that the legislation talks about an assessment or decision. Okay, what tends to happen, a lot of people tend to miss the assessment. Sorry, a lot of people tend to understand, the assessment, but they don't understand decision. So something, a directive would constitute a decision, not necessarily an assessment. That's why we are then able to object against it. Okay, now when we are raising that objection, there are timelines that are provided to you when you're raising an objection. So you also need to think about that. So hence I say you need to think about the entire dispute resolution process, where somebody can object. If the objection is not successful, they can then appeal the decision against the objection. If that's still not successful, then the next step is to then go to either the tax court or the high court. Okay, if again you're still not successful at the high court or the tax court, and you then go to the Supreme Court of Appeal, where generally when it comes to tax matters, the Supreme Court of Appeal becomes the last arbiter of that matter. Okay, so the last part, I think, is probably a bonus if you do write it. But I think what's important is just to highlight that there's an objection dispute resolution process, which equates to ask for reasons first, and once you've got the reasons, only then do we then object. Okay, and then the other thing to then talk about are then the timelines around the objections, because one thing that has been mentioned by the CFO, I would hate for us to miss any deadlines. So now you still need to talk about the timelines when it comes to objections. So when you want to object, you have to object within 30 days from the date of the decision. Okay, so now we're looking at Section 104 of the Tax Administration Act. So you have to object 30 days from the date of the decision that was made by SARS. Okay, then SARS also then has 30 days to come back to you with a decision. If then you'd like to appeal SARS's decision, then you've got again 30 days to appeal the SARS decision. Okay, but it's important that you also talk about the timelines of objections and appeals. All right, any questions?
Sorry, those 30 days, is it business days or just any?
It's 30 days. So not business days, 30 days.
Okay, thanks.
Thank you. Oh no, sorry, it's business. Sorry, I've just got it's business.
Okay, thanks.
Thank you. Any further questions?
Where do we get this dispute resolution from the SARS website, or?
Yeah, you can get it. You can get it off the net. So if you Google SARS dispute resolution guide, it will pop up.
Okay,
but
thanks.
it's off the SARS website. I think if Google should be faster than you trying to find this thing in the SARS website.
Just one last question from me. How important was that mentioning that section? I think 3 subsection for the Income Tax Act.
It's very important because the Tax Administration Act is saying you need to go back to the Income Tax Act to determine if you can challenge the decision. And it's really the Income Tax Act under Section 3, subsection 4 that empowers you to challenge that decision.
Yes. My question is, sorry, maybe I was not clear enough. My question is, I actually learned about this section today. I've never heard of. But what I realized when you explained it, this was the basis of this, of you going to say, okay, because of this section, you can actually object. So what I'm trying to say is, say, for instance, there's someone who does this in practice and they know how to do the notice of objection and all stuff, but what I would expect those people, they might not go and say, okay, because income tax says you can dispute, and then you go to that administration. They could have just said, oh no, this is the situation. You can actually object, and then they just follow that graph you show us on their response. Who says now, I'm just trying to see how much weight this to mention this section 103 in terms of you getting a C on this task. So if I didn't have to mention to say you, okay.
I suppose you can get a C without having specifically mentioned subsection 3. Sorry, section 3, subsection 4. I think that there's quite a bit that you can discuss around the dispute resolution and get into the dispute resolution.
Yeah, I'm saying this because I think my colleagues can remember from Endunamo. There is one other task where if you didn't get that indicator, there was this thing. If you didn't get that indicator, then there's no way you get a C on this task. So when you explain this, the application of this section 3, I actually see this was the main point where you can start to go deeper, So it was the basis of you, because now, say for instance, if you were not able to object this, it's not listed on that. So I could have go and talk about how do you do the notice of objection without realizing, oh no, this you can't actually object on this thing, on this aspect or on this decision. So I'm just saying now, I realize now, okay, I went on to just describe how do you go about disputing something, but I didn't know that you have to consider that section 3 first. So I was coming from not going forward. I don't want to make mistake. I don't know if SAICA is like that. With Endunamo, there's another task where if you didn't mention this, there's no way you get a C, You can have all this other nice stuff. So I just wanted to understand how much weight this section.
No, look, it does have quite a bit of weight, because you effectively, as you correctly said, you have to pivot around the section. Everything that is coming from the dispute resolution, it's driven by this. But having said that, I think there's quite a lot that you can discuss in the dispute resolution without having said, section 3, subsection 4.
Okay, thank you.
And still get to be competent. Yeah.
Matotonke, one last thing from me,
Yes,
without wasting anybody's Friday. But I just need a word of advice from you, right? How is the appetite for the text markers for quoting sections of the Act? And
no, I don't think it's necessary.
if one were to quote the section of the Act, what advice would you give for someone not to sound too theory dumping or too technical when they are answering the questions?
Yeah.
So what advice would you give there? And also, what is the appetite for section quoting for the markers of text?
Okay, so let me start off with the easy part. I don't think the markers are strict from a sense that you need to quote each and every part of the legislation, though that's not what they'll do. Of course, as long as you've explained the basis of what you're doing, and your explanation of the basis of what you're doing talks to what is contained in the legislation, I think that should still be fine without you having to quote the legislation and then doing the application. I think your second question was?
The second question is, if you were to quote from the Act and stuff, how do you do that without actually sounding like theory dumping or being too technical for the task? Yeah.
Okay. So to avoid, I guess, theory dumping, I always say application is key. Sure. And what do I mean by application? You need to be demonstrating that you are extracting things out of the information that has been given to you, out of the case study, and demonstrating that this is relevant to this particular part of the legislation for the following reasons.
Okay.
And then conclude based on that.
Without saying the X says this, wara.
Yes.
Okay,
so sure. This is what the taxpayer has done, and in terms of the legislation, it requires blah 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 blah, and therefore you then conclude.
Okay, sure. Thanks.
Right. Any other questions? Okay, so on that note, without wasting any further part of your Friday, so that you can go out there and enjoy yourselves. Okay, now you can't. Okay, no, actually you can. Let's forget about the books for tonight. Yeah, so that you can have a bit of a Friday. I know it was just one task, so yeah, of course the plan was not to keep you guys here up until 9 o'clock. If there are no further questions, so that's where we're going to finish off today. Thank you very much for indulging me today, and I hope I've added value to your lives, and see you next time. Cheers.
Thank you. Bye.
Thank you. Bye.
Thank you so
Bye.
much.
Sharp.
Thanks.